I have seen the same challenges with nearly every manufacturing businesses that I work with. Manufacturers have an expectation of the gross margin, let's say 30%. Then the reports arrive and it's showing at 20%. And they all start questioning, where did the other 10% go? The strange thing is, the factory has been busy, revenue has been growing, but somehow the profit is not following. Cash remains under pressure, and nobody can confidently explain why, what's driving this result, and how can we improve it. In my experience, the biggest problem is the lack of visibility of the true cost of manufacturing each product. There are so many costs go unnoticed during the production journey that impacts on the end result and it consumes cash. At the same time, manufacturers are dealing with the rising cost everywhere. Material prices continue to increase, labor costs are rising, energy prices in the UK remains high, freight tariffs, compliance costs continue to add pressure, and every year it becomes more expensive to manufacture the same product. So what happens next? The owner injects personal money into the business, redundancies begin, machines are sold to generate cash, bank facilities increases, consultants are brought in, the accountant is asked why profit is falling, and the advice is usually cut the costs or become more efficient. Those things certainly help, but they are often treating the symptoms rather than the cause. A few months later, the many businesses find themselves back where they started because they still don't know what actually driving their profit and cash flow. In my opinion, many people don't realize the fact that manufacturing businesses invest significant amount of money in machines, people, inventory, factory space, technology, and all other supporting resources, that those assets cost money every single day regardless of what's manufactured. So in that case, most important question is here, how effectively, how efficiently, and how quickly are those investments being converted into profit-making products, cash generation, and business growth? That's the question every manufacturer should be asking. Because if you can't clearly see where profit is lost, where cash is becoming trapped, you cannot fix the problem. There are 4 critical areas of manufacturing that directly impact on profit and cash generation. These are product costing, production efficiency, production planning, and pricing. If you improve those 4 areas, you'll make better decisions, protect your margins, and generate more cash. I'll be breaking each of these areas down into much more detail in my upcoming videos, showing you the practical steps you can take to improve your profit and cash flow in your manufacturing business. If you would like more manufacturing finance insight, please subscribe to my channel. My name is Yeşim, Driving Manufacturing Profit. Thanks for watching, and I'll see you in my next video.